Welcome to NetSuite Refresher number 6, Period and Year-End Closing in NetSuite. Well, it's July of 2021, and most of us are really busy working on closing the fiscal year. So before NetSuite, we had lots of checklists and we used lots of trial balances and reconciled things. And now with NetSuite, we continue to do those things, but NetSuite offers us a lot of tools and reports and searches that can make the process go more smoothly. So that's what we're going to be talking about today. Today, we're going to talk about period closing in NetSuite and some things we can use NetSuite for at the end of every period. And those things will allow our year-end closing to go more smoothly. We'll discuss a few year-end closing principles and then finish up by talking about year-end closing in NetSuite. Period closing tasks in NetSuite. So in addition to all your normal things you do when you close a period, NetSuite can help you by reconciling your bank account, credit cards, and even your cash accounts through the bank reconciliation tool. It allows you to match transactions to your bank account and make sure you don't miss anything. You can use several reports and searches to review and reconcile outstanding advances, receivables, and payables. And some of those most useful ones are listed here, like WHQ advances by employee, WHQ 1519 account, advances by employee, your AR register, open bills, and AP register. There are also several things you want to do related to the transmittal and other things, like you want to ensure that all your transmittal entries are recorded correctly. You need to reconcile your IT Clear Responsibility Center. The balance should be 0. If it's not, then you have something sitting, some transactions in there that are not where they should be. You need to ensure that all outgoing transmittal entries have been sent. So if you have a balance in your global RC or in account 1519, it means you have not done your transmittal entries to send specific transactions, or you have not transferred the related amounts from the originating RC into those RCs. Those balances should be 0. You need to ensure that all transmittal payments are recorded correctly. So account 1311 should be 0, the balance. It needs to mirror what happens when you receive a transmittal. So when you receive a transmittal payment from the area into your bank account, you need to do a transfer with a journal entry from account 1311 to your bank account. You need to ensure that all exchange gain or loss has been charged to the appropriate RC, an RC that you use to record exchange gains and losses. And that should be done. You should transfer any realized gains or losses from the Forex RC and the none RC into an RC that is actually going to take the expense or the income. The balance should be none in Forex and none RC. And then lastly, the finance leader can lock the period. I'm going to show you how to do that. So I'm going to change to a finance leader. I'm in Andorra. And I want to lock the the oldest open period. So I'm going to go to Setup, Accounting, Manage Accounting Periods. And I'm going back to fiscal year 2017, and I can see that June 2017 is not closed. You can see it's not the green check mark. So I'm going to click on the checklist button, and I can lock the receivables and the payables one at a time, or I can lock both at the same time by clicking Lock All and Submit. Now, what this allows me to do is it just closes those on the general ledger so that you don't accidentally post into that period. So if you keep up with this every month as a finance leader, then it just keeps your general ledger default dates to be more current. And globally, the rest of the period close checklist will be finished, will be accomplished. This is all done globally. But you can go ahead and lock your AR and AP just to keep your default date up to date. All right, let's go back to the presentation. That's all on period closing, but for year-end closing, we're going to talk about two main concepts. The first is reconciliation. When we close the year, we need to keep this concept in mind. All balance sheet balances should be accurate. Thus, they are reconciled and they have been agreed to supporting reports and they currently exist. So for inventory, you've done a count. For fixed assets, you've confirmed that they exist and like you compared it to your fixed asset register and you've counted them. For advances, you've agreed them to supporting records, you've reconciled your bank accounts, etc. So there's nothing on your balance sheet that does not exist or that is inaccurate. The concept of cutoff is how you determine which transactions belong to the current fiscal year and which belong to the next fiscal year. And then you make the related adjustments. So if you have prepaid expenses for the next fiscal year or income you've received for next fiscal year, you would have to make adjustments, even though you've already recorded it in the current year. You would make an adjustment to record it in the future fiscal year and remove that amount per se from your current fiscal year, remove that income or expense so that your financial reports are accurate. So let's keep those in mind as we continue to talk about year-end closing tasks in NetSuite. So let's go back to NetSuite and I'm going to switch to a bookkeeper role so that I can show you a few journal entries. Excuse me. So in addition to all of the period ending tasks that NetSuite can do and that you should do, like reconcile your balance sheet accounts and ensure that all your responsibility centers have been reconciled related to your transmittals, etc. There are some other things at the end of the year that NetSuite can help us with, such as inventory. If you have inventory, you need to count it, and then you can adjust the inventory amount in your general ledger to be the accurate amount, the actual amount. For fixed assets, you can propose assets, which means any assets that have been recorded in your ledger during this past year using a fixed asset account. It will search for them and it will add them to your fixed asset register. And then you can depreciate them. If they've been disposed, you can record that, you can revalue, you can transfer them. All of this can be done in NetSuite. Some other useful things that NetSuite can do at the end of the year are you want to create invoices for all of your sales that you have not yet invoiced. You want to record under payables, you want to pay all the bills that are outstanding that need to be paid. You want to enter all bills for any expenses that you have incurred, but you haven't received invoices. This is called accrual. You need to accrue all your expenses. And you can do that by entering bills here. Other things you want to do are make sure that all of your expense reports have been approved by the approver and the accountant and paid. You want to make sure that all of the journal entries that are outstanding from the current fiscal year have been approved so that they've been posted. And you need to make sure that all your bills have been paid. I think I've mentioned that already. So let's go back to the checklist or the presentation. So as we just said, NetSuite can help us by doing inventory adjustments with the adjust inventory option, fixed asset adjustments by proposing assets, running depreciation, asset disposal, asset revaluation, etc. You should create invoices for sales received and not yet billed through create invoices. You should ensure that expense reports, bills, and journal entries from the fiscal year are approved and paid. And some helpful reports and searches you can use in NetSuite would be WHQ Outstanding Expense Reports and WHQ Approved Journals and Open Bills. Some other things we can do, sorry to keep switching back and forth, but I think it's helpful to see, is in related to the cutoff principle. So these can all be done. You need to make adjusting entries related to income and expenses that belong in the future future fiscal year. And that would be done via journal entry. So we're going to go to transactions, financial, make journal entries. So let's say that I have prepaid for 1 month of internet. So I've actually paid for my July internet in the month of June. And let's say it was €100. So I've already recorded it. It's already in my general ledger. And what I need to do is I need to reverse it. So that amount of expense does not come out of the current fiscal year. So I'm going to do a June 30th journal entry. Let's see here. My posting period is June 2021. And I'm not going to actually fill out the debits and credits here. I'm just going to explain how the dates work. So let's say I would reverse the expense, 100. And if you want to learn more about how to do this, there's several helpful IFM training documents related to year-end closing that you can look at to help you understand which responsibility center to use when you make these adjusting entries. I'm going to reverse it on June 30th, and then I want to put that expense into the next fiscal year. So I'm going to choose a reversal date of July 1st. So this means that this journal entry I'm making is going to be automatically reversed. It's a memorized entry, and it's going to be automatically reversed with a date of July 1st. Now, if I leave it like this, it's going to post the reversal in June 2021. But if I click Defer Entry, it will post the reversal on this date, which means it will get posted into the next fiscal year. So I want to make sure to click Defer Entry. Okay. So there are lots of different year-end adjusting entries that you might want to use the automatic reversal and defer entry for, such as deferred income or accruals, anticipated expenses, and such. So just to continue what we were talking about, other things you can do at end of the year NetSuite would be accrue expenses paid for which no bill is yet received through the create bill entry, or you can do a journal entry. You want to record prepaid expenses, deferred income, and anticipated expenses with journal entries. And you can check defer entry to auto reverse on a specific date. Lastly, you need to reclassify any portions of long-term loans from long-term to short-term. So if you have a portion of a long-term loan that's going to become current, you need to reclassify it from account 27-1 something to 261 something. So that is it. We talked about period closing in NetSuite, a few year-end closing principles, and year-end closing in NetSuite. Hopefully this is helpful for you as you're in the middle of closing and you can realize that NetSuite has a lot of reports and searches that might be useful for you, as well as that automatic reversal feature with the defer entry checkbox that might be useful for you. If you have any questions, please feel free to reach out on our workplace forum or via a message or an email. But I hope you have a happy closing. Bye.